Hello everyone. This is CA Priti Agarwal and today we have with us one idiot who's on a mission to make 100 crores and to buy a Rolls Royce. He already owns a portfolio of around 48 crores and is considered a legend when it comes to personal finance. Many of you might be thinking, why did I call him one idiot? Well, you'll get to know this as you watch the entire podcast. His name is Mr. Gajendra Kothari, the MD and CEO of Etica Wealth. I, being a chartered accountant myself, genuinely believes that everybody should learn about money and how to make their money grow. Today, we will have a very deep and raw conversation with him and learn from his journey of personal finance. Gajendra Kothari, sir. It's such a pleasure to have you here on this podcast, sir. A very warm welcome to you. How are you, sir?
Thank you, Priti. I'm doing wonderful. Thank you for inviting me to your podcast. I look forward to this great conversation today.
So that people get to know more about you, first tell our viewers what's the total value of the portfolio that you manage for your clients, sir. And I'd also want you to answer what's the value of your own portfolio.
So today, our firm, which is Etica Wealth Private Limited, based out of Bombay, we are managing close to 2,500 crores of our clients' assets, and we are a 40 people team. Uh, this entire portfolio is based is is a sum total of around 7,500 clients that we are managing worldwide, and our personal portfolio, which is what we all invest, our family money,
Yes.
uh, it should be just about to touch 50 crores, I would say right now.
Oh my god, that's huge, sir.
Yeah, it has been built brick by brick over the last 14 years. Started with very small amount of 10,000 SIP. Uh, it was a challenge that I took in 2010. That if I'm investing my clients' money in investments, which I don't believe myself, then I'm not doing a big justice. So
That's
I
so
should
true.
I should put my money first in anything where I believe, and then put my investors' money, so that in the journey we swim together in this journey or sink together. So so
So, yes,
yeah,
please go ahead,
so
sir.
so that was the philosophy from day one. That is why we named our company Etica Wealth. The idea was ethics before everything. So whatever we are going to do for our clients, it has to be ethical. It has to be, they are giving their hard-earned money to you. So you have to think twice before you invest that, making sure that you do never lose their capital. You never lose money. As Warren Buffett says.
Absolutely.
So this was a principle with which we started, and God has been kind in the last 14 years. We have grown quite organically, and today have reached 2,500 crores. This is more than a work to us, Priti. This is more of a passion and the purpose of our life. Uh, this is what is our ikigai, I would say. So we don't feel this is like a work. This is quite playful for us.
Your own portfolio also, you have grown a lot. You manage it individually or do you manage it with somebody else's from your family?
No, so this is basically my money, our family's money that I manage. I along with my brother, we take the decision
All
on
right.
how to invest, and our entire money is for long term 99, because we're still young. We don't have any major capital expenditure coming up. Moreover, Priti, we had collective experience between us more than 35 years, me and my brother. So we have seen the markets, we have seen the cycles. We are quite aggressive in our approach. Of course, we invest all our money through mutual funds and not in direct stocks or any other mode. But within mutual funds, we go quite aggressive because we have seen the cycles. We have seen this industry. I've been a part of mutual fund industry for 20 years. I've seen all the ups and downs. I've seen how things work inside, and that is where I realized that I can take bit more aggressive. We can take bit more aggressive risk, because the only risk which we face in our portfolio is volatility risk. It is never
Yes,
the
true.
permanent risk of capital going down. Most people, when they invest their money, they think, oh, my capital can go down 50%, 100%. It never happens in a mutual fund portfolio, because it's a diversified portfolio. Of course, over a short
Absolutely.
period of time, 1, 2, 3, 5 years, your portfolio can go down by 10, 20, 30, 40, 50% also, based on external market situation. But if you don't need the money and if you don't panic, then at some point in time, it has to bounce back. It has to go up further from where you invested. That strong belief we have on Indian economy. So that is why we are buy and hold kind of investor. We hardly churn our portfolio. We don't get panic at all.
The stock market is the instrument for transferring money from the impatient to the patient. So I think you work on the same principle. Your
Absolutely,
company does.
I completely agree with you. Most of times, you've seen people get nervous in when markets go down. We become very happy because Warren Buffett also said that be fearful when others are greedy, and be greedy when others are fearful. So every time when there is a panic, there is a disbelief in markets. We become quite happy, though our current portfolio looks in red, but we know that this is a time to go in. This is the time to be aggressive,
Yes.
and eventually, good days will come back. So we always look out for such opportunities.
So, sir, when we talk about such huge numbers, sometimes people tend to believe, or maybe they start believing that, oh, he may be a very rich kid since his childhood, or maybe his parents were too wealthy so that he could have so much of money so that he could invest. So, to answer this question and to know more about this thing, I would like you to answer how was your school life, basically?
Very well, Priti. I think our viewers should know about the background. I don't come from a very rich family. I come from a very middle class family, maybe a little more upper middle class, you can say nowadays, of course. But I was brought up in in a state called Assam where I did my schooling. That time we have very limited reserves. We were not poor, I would say, but we were just like any other middle class family. So I had a great childhood, and I was lucky that my I was a part of joint family, which means my parents, uncles, we all like 50 people in one family, and we had one common business. So I never wanted to join that business because I realized the only thing you can make in that business was money and nothing more. That was really exciting, and I was lucky that they could send me outside to study. So I came to Bangalore. I did my business management, bachelor's in business management, and thereafter I went to IMI Delhi, where I did my postgraduate, and that is where I got hired by UTI Mutual Fund, in campus placements, and I was called to Mumbai for interviews, and they saw my name, and they asked me, okay, you come from Guwahati, Assam, why don't you join our Guwahati office? So one thing I was very clear that if I have to be in finance, if I have to be in wealth management, I have to be in Mumbai, which is the capital of India, and
Yes.
they accepted my request. So ever since then, I've been in Mumbai. So 20 years I've spent into this industry. 7 years I worked with UTI, the only company I ever worked with, and I've learned a lot from this company, from the bosses there. They were kind enough me. They were kind enough for me to send to Bombay, London also for 3 years. So
Yes, I believe you were in London in around 2007 8. Am I right?
yes, Preeti.
Hmm.
And there also I realized that outside India also there is very less financial literacy in even in developed world, and that is what intrigued me. And I said, look, I want to come back to India because in India also financial literacy is very low, and that is why you're doing such a great job of educating people, right? And today, thanks to technology, it can be amplified 100 times. So I said I have to come back to India, and I have to. I love talking to end customer, end investor, and I have to explain the concepts in simple language in their own
Yes.
way.
Yes.
So that is when they'll be able to understand. They'll feel confident. They will be able to open up more. And if I'm showing my own portfolio to them every time I meet them, that is what will drive the biggest comfort in them.
Because
This is
that
what
builds trust.
that builds trust, because see, once you have shown your portfolio, Priti, there is nothing else to convince. If I am
Hmm.
showing you everything that I have done, the good, the bad, the ugly, the
Yeah.
cost and everything, then beyond this, I cannot answer any question of yours. you know
Yeah.
so this was our belief, and with this belief we started Etica in 2009. uh, of course, in any business the first 3 4 5 years are very slow. You have to build your foundation, and I was
Hmm.
very clear that
Absolutely. That's with every business.
that's what every business. And I was very clear that I'm not going to build this business fast. I will take time. I'll make sure that the quality is in place. I don't want to, because of targets, because of short-term orientation, because of quick, run. You end up doing things differently. I knew this was a long-term business. This was a business of compounding. If our clients' money compounds over a period of time, our assets. See, the first question that you ask is how much money you manage. If you'd realize that the wealth that has been given by our clients for us to manage if their wealth compounds over a period of time, our AUM automatically compounds, right? I knew very well that this is a very long term game. At least 10, 15, 20 years later, I'll see good results. See, one thing I can tell you, I was very confident from day one. That is why even before we started the company, we made it a private limited firm. We thought the name Etica for 3 months, and then we decided because we wanted everything to last for 20, 30, 40, 50 years at least.
Yes.
So, and because you are the own boss, you are your own boss, you don't have to take orders from anyone. You can devise the strategy of the firm. You can decide the philosophies, the principles on which you work, on which you won't work. So we
Hmm.
were very clear that what kind of people we want to manage money. We are not here to manage short-term money. We are not here to give you quick, fast returns. You know,
Hmm. Hmm.
long-term, our idea is to build compounding in your portfolio. So this is all what we did with our money. We started doing for investment.
So now coming on to the very important question, which our viewers might be most eagerly waiting. Why do you call yourself one idiot, and from where did this idea of buying a Rolls Royce came to your head?
Yes, I'm glad that you asked this question. Thanks to this movie, this is a short movie that was released, I think, 11, 12 by IDFC Foundation. It is freely available on YouTube. The viewers just have to type One Idiot on YouTube. It's a 33-minute short movie. It's
Hmm.
meant for youngsters like yourselves, who are about to enter a corporate world. See, money as a subject is hardly taught in schools, okay, in a practical way. Even these discussions do not happen at dining table, yeah, at
Hmm.
families. This thing. When you get a job, your HR team doesn't tell you how to invest your first payslip or whatever. And I've seen people spend 5, 10, 15, 20 years just trying to borrow knowledge from their friends, colleagues, peers, bosses, and try to achieve their goals. I've realized that wealth can never be achieved on borrowed knowledge. You have to invest your
Hmm.
hard-earned time into it, right? So
Yeah,
if our viewers would
that's
be
so
listening to
true.
this podcast, they're investing their time into this podcast, right? They will be spending the half an hour, 40 minutes. That is an investment. So I realized that in the first 15, 20 years, most people who were in job or business, they were just working hard for money, but their money was simply sitting idle in the bank, not working hard for them. And this movie exactly tells you the secret sauce, that how that one idiot who was called idiot in that movie, he was actually worth 100 crores, but the world didn't know. And when the world came to know that he was worth 100 crores, the all society, the children felt very embarrassed. So this one idiot invites them to their house for a lunch, and during this conversation at lunch, he tells his secret sauce, that how he made 100 crores. and there
Okay.
was and there was a boy in that movie, maybe age 8 9, who was silently watching him. And he decided that one day I want to become one idiot. So at the age of 40 45, this is how the movie ends. This boy has a Rolls Royce car, where his parents were taking a drive, and he says on the back of his jersey, it says, "I'm one idiot, follow me." So that day I decided,
Okay.
this is very powerful. Of course, that was a real idiot. It was a movie. So I said, one day, can I become real idiot? Which means I make 100 crores through my investments. Uh, See, whatever money that I put in has all come from my hard work, from my business. Of course,
Yes,
my
yes.
business of wealth management, that is now doing well, but it has been all the hard work of last 15 years. Me, my brother, my family, all put in. In the first 5, 7 years, we worked very hard, with these Saturdays, Sundays, morning 10 to evening 7 o'clock. We used to travel a lot. Wherever there was a client, we could go travel 2 hours, 1 hour, and meet them. So we really toiled hard. So, and again, now after 15 years, this business is making a lot of money. Of course, whatever money that I'm earning from this profession, I'm channelizing back into SIPs. Because unless, see, I'm telling this to the audience for the first time through your platform, that I'm the largest client of my firm today. Okay, and I'm
Yeah.
the largest SIP investor of my firm. And
All right.
that gives me so much proud feeling, that you believe so
You're
much in
doing
this.
what you're preaching and what you're teaching your clients.
You yourself believe in such concept, then and you feel proud that I'm the biggest customer of my firm, right? So that was the whole idea, and that is how we started. But when we started, I just had 10,000 rupees. SIP because that time we were just about to start a firm. There were a lot of expenses.
That was back in 2000, somewhere about around 2010, you
So
said. Mm-hmm.
2010, I started my first SIP, and then we
Okay.
kept on increasing the SIP pretty quickly. So by 2016, I think it became around 3 lakh. You know,
Mm-hmm.
3 to 4 lakh, 5 lakh, 7 lakh. As and when the income of my company went up, everything. I
Mm-hmm.
mean, I do enjoy present life also. ऐसा नहीं कि I'm putting all my money into SIP and I'm not living present or I'm becoming very confused. ऐसा कुछ नहीं है. I am
Mm-hmm.
living my life fully, but I know कि ये पैसा मुझे नहीं चाहिए and I can deploy this for long term. So I just use it through SIP. That's how 15 lakh SIP, then 20. Around COVID, I think it was somewhere around 19 lakh odd SIP was there. Then it became 22, 25, and now it's 30 lakh per month it's sitting. And it will keep going up. See, it's not surprise because as your business compounds,
Mm-hmm.
you getting bigger and bigger unless you do a big fatal mistake, right? If
Yeah,
you keep just doing the boring stuff, keep client interest in mind, keep doing the hard work, don't become complacent. As India grows, your industry grows, your firm grows, your SIP will grow, and that's how you keep inspiring people. But this
that's absolutely
journey
true.
of 1,000 miles, the journey of 1,000 miles begins with a small step, right? So somebody has to take that first step. Now, many viewers might think, okay, 30 lakhs I can't do. You don't have to do 30 lakh SIP, or nobody else has to do. You do it
Mm-hmm.
suits your goals, what suits your requirement. You don't have to
Mm-hmm.
become one, right? It's a challenge that I
Mm-hmm.
have. And even in my case, I don't need 100 crores. I don't need Rolls Royce. You mentioned about Rolls Royce, which is sitting right there,
Mm-hmm.
the
Mm-hmm.
model. But that is an inspiration to me that if that boy can buy a Rolls Royce through an SIP, and that was in the movie, why can't I do in real life? And if by doing so, if it can inspire hundreds and millions of people in our country, youngsters, I think that's a great job this podcast would have done then.
That's so inspiring.
Yeah,
Now, sir, given the complexities and the technicalities that is involved in the market, for a beginner, I believe a mutual fund can be a very good start. Like the if somebody is jumping onto the stock market for investment, I think the very first step that they can take in the investment journey is to begin their SIP first. What is your take on this? I would like to know from you. Do you think it works this way, or should one go for stock markets or equities?
great question, Priti. Let me tell you, I'm a MBA in finance, CFA chart holder. I've done chartered alternative investment analyst. I've done international certificate in financial advice from UK, London. Right.
Hmm.
In spite of that, I put all my money through SIPs in mutual funds for the last 15 odd years, as I said. The simple reason that if in our industry we have great fund managers who has demonstrated a 30-year track record, a wonderful track record of creating wealth, why should I really apply my mind if the system is so well set? Okay. Though I have good connections in the industry, I can really approach any fund manager and ask for advice, or I have the knowledge to do my research also. But I don't have the time, or I really don't enjoy this process of doing it. I
Yes, nobody does. So that's the, I think that's the major hindrance that people face, like lack of time or maybe lack of knowledge.
exactly. So if there is someone who can do it for you and has a track record of doing it at a very reasonable cost, why should I apply my own mind and do it? Okay. I love talking to people. I love managing other people's money. I love managing the wealth. So I spend all my time there. However, I'm not saying that all of people should do. What I would suggest is maybe they can divide 70-30, 70 strategic long-term money, which they can invest through mutual funds. Even if they don't understand much about in mutual funds, they can begin their journey with something called index funds or buying
Yeah,
the market, buying the index, which
yeah,
is as simple as ABC. They don't have
yeah,
to see which fund manager, which company. They can buy any index fund and good to start if they want to start on their own,
yeah,
right? With 30% of the money, Priti, if they have a lot of interest, keen, and they want to try their hands, there's no harm in trying. Everybody,
yeah,
unless you won't know whether you have interest in this field or not. So start with this 30%. You can invest, of course, try and invest in large companies where quality companies where you don't lose all your capital. It can go up and down, but at least you don't lose entire capital if you invested in large companies. And then see for a period of 6 months, 12 months, how does it work for you, If you get more and more interest, maybe you can start allocating bit more amount over a period of time. But at some point of time, if you think that you by doing all this you're not able to beat the market, which is index, then why
Yeah.
really? I know people who have been doing this for 10, 15, 20 years. If I ask them how much CAGR or how much return they've got per annum, they have no answer. If I ask them, have you beaten the index, they have no answer because they've in the first place they've never calculated this return.
Exactly.
Unless you know that you've beaten the market, how do you know that you're doing great or bad, right? Of course, few of these investors would have done a great job and beaten the market, which means they can continue to invest a larger sum of their money through direct stocks. But at some point of time, you have to have this reality check that if I'm not able to beat the market, okay, think if you're doing for fun stuff, then again restrict to 20-30% so that even if you're not beating the market, it keeps you busy, it keeps you going. Not everything is about getting the best return on your investment. If 20% that gives you a lot of kick, a lot of it involves good amount of time and you enjoy doing it, okay, that's fine. But last sum of money, 60, 70, 80% should be given going through a professional route where your money is really working hard. You cannot afford to do any experiment with this kind of money, Priti, because if you lose 5-10 years with bad returns or not so good returns, time cannot come back.
That's so true, sir. Now that you have parked almost all your money into the SIPs and the mutual funds, I'd like to know from you, sir, what are the various kinds of mutual funds and how do one really choose between which mutual fund would be best suited for their needs? I would like to know this from you.
No, it's a very good question again. See, the beauty of mutual fund is that if your money for one day also, you have a mutual fund to invest. If your money to invest for 50 years, there is a mutual fund. So, if your money for retirement, there is a mutual fund. If your money for child's education, vacation, house purchase, short-term requirements, emergency, for every goal in your life, there is a mutual fund. Now you have
Yes.
to be honest with yourself and say what time frame I have, how much time frame I have to invest, 6 months, 12 months, 6 years, 20 years, and what is the goal for which I'm parking this money. Okay. If you're very clear about these two goals, then the third thing you should be answering is what kind of returns do I expect? Okay, in short term, medium term, long term. And what kind of person I am. Am I a very aggressive investor who want 12, 14, 15% return? Or am I an investor who is happy getting 1, 2, 3% higher than FDs? So you have to
Mm-hmm.
be very honest with yourself and see what is a reasonable rate of return that you're happy with over a 5 year period of time. I'm just talking about, let's say, medium term, 5 years. If you say that I'm happy with 10% kind of return because FD gives you 7-8% return, if I get 10% return, I'm very happy. I want my capital to be reasonably safe. I want my capital to be less volatile, and
Mm-hmm.
10% I'm very happy over a 5 year period of time. Then there are some
Mm-hmm.
these hybrid funds, which is a mix of equity and debt, which can give you around 9-10% returns. If you want to be very safe and don't want any equity exposure, then you can go with debt funds or bond funds where there is no
Mm-hmm.
equity at all. And there you can expect FD kind of returns like somewhere between 6 to 7, 8% returns. And on the other
Yes.
hand, you want to play very aggressive, you want all equity kind of portfolio, and you know that at least I have 10 years time frame. I'm pretty young right now. I don't need money. I can do SIP. You can start with index fund to begin with, which is a pure equity fund where you can do Nifty 50 index or Sensex index, and whatever index gives you over a 5 year period, you will get similar kind of returns. That becomes the base. Now, if you
Mm-hmm.
want to go more aggressive, then there are large cap funds, mid cap funds, small cap funds, sector funds. There is a whole bunch of these aggressive funds which are out there where over a 10-year period you can expect 14-15% kind of return. But mind you, these are very volatile. There could be a scenario where first 5 years you didn't make any money, right? And you might get nervous and you might pull out at the wrong time. So these kind of funds require a very long term philosophy, and ideally I would suggest you should take help of a professional and not try on your own if you do not have the time to do research or knack of understanding these.
Yes. Yes, and another thing, mutual fund offers two kind of options to the investors, like the lump sum investment, and another is systematic investment plan. That is the SIP. In the lump sum investment, people put their a whole lot of money at one go, and in the SIP, it is systematic investment. So, among these two, which one do you think is better to start off with if somebody is a beginner and doesn't have much knowledge about the investments in the stock markets?
Absolutely. See, SIP and lump sum are both different ways of investing. Uh,
Yes.
If you ask me, over a long term, lump sum should give you high returns. The logical answer being, if you expect the markets to go up over a period of time, when you're doing SIP, you're buying at all levels, right? If you're doing lump sum, you're buying it today completely. So you
Mm-hmm.
higher upside.
Yes.
You don't end up buying at higher prices. So logically, as per theory, lump sum should give you better returns over a long period of time. Okay. Having
Yes.
said lump sum, who will invest lump sum? People who have accumulated savings can go for lump sum. But people who have monthly income coming every month, like a salary, or a pocket money the teenagers receive, if they get pocket money or if they get any income every month, then they have no choice but to go for SIP. So you earn income every month, you save and you invest every month, right? But any point of time, if you get lump sum amount by any bonus or anything, then you can straight away top up that SIP which you are doing by that lump sum top up also, 20,000,
Yes.
50,000, and let your SIP of 5,000, 10,000 continue. So as and when you have money, you should invest. The right time to invest is when you have money. The right time to withdraw is when you require money.
Yeah.
Make sure you have given 10 years in between. If you've given 10 years in between, almost all the investments you've done at any point of time should be able to yield positive results, good positive
And
results.
I also believe, sir, we will always expect the market to fall so that we can put in more money if we are looking for long term, so that we can average out the portfolio a bit more.
Of course, see, SIP, the beauty of SIP is that because you don't know how markets will behave,
Yes.
markets go up, markets come down also, so your SIP helps average. But having said that, today if you are having lump sum, don't I generally don't believe that averaging of that lump sum would really work in the long term. I personally believe that if you have money, you can
Hmm.
invest fully, and if you have SIP, let it go, on a monthly basis. That's how it works. But most people end up timing the market, right? Thinking, okay, markets are high today. Pretty
Yeah.
nobody knows. Six months down the line, markets can be even higher. See, if you're investing from 10-year point of view, in fact, markets are at the lowest today. Okay, so
Yes.
so so you can't time the market, and enough these things we have heard on the net from gurus that timing is very difficult, timing the market is more important. I think whatever wealth I have made in the last 13, 14, 15 years is not by timing. Let my SIP do the thing. Any time I have lump sum also, and so I just top it up depending on which sector or which theme or which mutual fund is more attractive, and I just have patience for 10, 15 years, right? I don't really try to book profits. Maybe once in a while when I think really in this sector it has become quite aggressive, then I might book profits. But otherwise, 90-95% of the time, I don't do any actions churning on my portfolio. I just, buy and sit there. Don't do much.
Okay, so this was the exact thing that I was going to ask you next. That if somebody, after watching this podcast, thinks about starting the investment journey, that I'll start my own SIP from now on. So, is this the right time to invest, or should they not invest or wait for the markets to correct?
So there is a wonderful old Chinese saying which says the best time to plant a tree was 20 years back. The second best time is now. Okay.
Okay.
Yeah, which means if there are viewers who think, oh, I should have started 10 years, 15 years back, I had money also, don't regret. The second best time is now. Start today. Okay. And if you start today, imagine 20 years from now, what will happen. But if you keep delaying, thinking that okay, today markets are high and this, you will never be able to jump in, and you will never be able to become good investors. So don't delay. There is a huge cost of delay that I've seen we all pay. I started at the age of 30 seriously investing into mutual funds. I could have started at the age of 24. In hindsight, Priti, I lost 6 years of my life. I didn't invest. I didn't let my money work. And today
Mhm.
I really see the cost of that 6 years delay, right? So, to
Yeah.
all the youngsters who are watching this podcast, I would say don't wait next day also. If you have 500 rupees, begin today with 500. See, you don't have to start with 5 lakh or 2 lakh. If you don't have this money, you don't have to wait for it to accumulate. Start with 500, 1,000, 2,000. Gradually keep on increasing this as and when your income and savings grows, right? But keep continuing this exercise without looking at the results for the first 5 years. First 5 years you won't see any returns, or you will not see any meaningful results. You have to have a lot of patience, discipline. After 5 years you will start seeing some signs of growth, and you'll get more confidence. And The first 1 crore is always the most difficult, right? It
Yes.
really makes you, it tests your patience, it tests everything. You would have seen market corrections, you would see markets are very slow, nothing happens. I'm hardly seeing any returns. But after 1 crore, the moment you hit your first 1 crore, then from one to two and
The
two to
power
four.
of compounding starts then.
So first 5, 7, 10 years, not much happens, and then everything happens.
So, what advice would you like to give to our viewers who are 22, 23 years old, maybe, and have just started earning and they don't know much about the market? So, what advice would you like to give them?
Yeah, so I have only three pointer advice. Start early, invest regularly, okay? Stay the course, which means just hang in there. For what goal you have started in the first place, keep doing, keep sipping the money, keep investing money unless you have achieved that goal. And my fourth
Yes, and
point,
I
all
also believe that people should make it a habit of investing. Like whatever salary they draw, they should at least give 10%, 20% of that every month. That this is the amount that I'm going to invest by hook or by crook.
with young people who are staying with their parents, where there is no rental expenditure, there is no khana pine ka expenditure, you can actually save
Hmm.
more, right? You can save 30, 40%. I'm not saying you
Hmm.
should save 50%, 50% you should go out and enjoy also, right?
Hmm.
30, 40% if you're able to save, do save. Savings can give you a lot of confidence in life later on, right? If your money in the bank account, in your investments, your tone will be very different. You will sound very confident. You don't have to depend on
Yes.
anyone else, right? So yeah, start early, save regularly, stay the course, and get wealthy. Become 188 someday.
And and so, what are some of the success mantras that you genuinely believe in that has brought you from where you were to where you are today? So, is there some mantra that you genuinely believe in?
Yeah, I believe that there's no shortcut to life. There are lots
Yes.
of people who are waiting for some luck, some opportunity to come. Luck, only the hardworking people get lucky. Opportunities come to those who are prepared. If you're not prepared,
Yes.
opportunity might come and you won't be able to notice it also, right?
Yes.
So that is there. Keep learning. I think the biggest challenge today we find is most people stop learning. The moment they are little successful, they stop learning. Even after 20 years in my career, I'm still like paranoid. If I don't learn something new every day, I don't read or find something good on the internet. I do Twitter at least 30 minutes a day. I learn from Twitter every day 30 minutes. I don't get sleep if I've not seen Twitter, and learn from the YouTube videos, podcasts like these. It can be any medium. Reading books. We have almost all of us in our generation today have forgotten this art of reading books, right? So read the great books, because by reading, learning from all these things, you will not make the mistakes which we have done. I might have done a lot of mistakes early in my career, and today through this podcast, I'm telling you what not to do, what to do.
Mm.
And if you follow this, you have fast forwarded your life by 10 years by not doing this mistake, right? So keep learning. Learning investment in knowledge always pays the best interest, more interest than mutual funds, equities, cryptos, bitcoins, real estate. So knowledge is very powerful. For the rest of your life, invest in this wonderful thing. I'm sure everything else will be taken care of.
Yes, yes, absolutely. It was such a pleasure to have you here, sir. And I guess all our viewers have got to learn a lot from you, including me myself. And thank you so much for joining us.
Thank you, Priti, for having me. I would like to thank all the viewers in advance for finding out time and watching this. I hope you learn a couple of valuable lessons from this podcast and apply this in your life. And hope to see few of you, if not all, to become 188 someday and maybe ride in your own Rolls Royce and inspire many others.